Toronto housing prices hit a record high in May. However, sales were down from April and March, which is interesting. Does that mean the market's cooling? Was it something to do with lockdowns? That's what we're going to discuss in today's video, which is going to be more of a focused and local real estate update that we're trying out this month just to see how you guys like it. So at the end of this video, do me a favor, hit the comment section and tell me if you liked the local market commentary versus the national market commentary, and if you think that this is something we should continue to do. But before we get into it, do me that favor, hit that subscribe button, hit that notification button, please hit that like button so more people like you can see this video, and don't forget about our race to 25,000 subscribers, where one lucky subscriber, and I sincerely hope that it's you, will win $5,000 to put towards their RESP, their RSP, their TFSA, or just to pay down their mortgage. It's totally up to the winner. All you have to do to enter is hit the subscribe button. It's free, it's easy, and it's definitely worth it. The definitive guide on how to manage your credit: product, penalty, price, in that order. It's never been more important to get your mortgage right. Okay, so Toronto housing prices hit an all-time high while sales were down from March and April. So today we're going to look at what's going on here. We're going to take a look at the Toronto news release and the Toronto Real Estate Board news release, and we're going to take a look at their data and their charts and try to figure out what's going on in the Toronto market and what this means for the coming months. And I'll tell you what I think is going to happen in the Toronto real estate market here at the end of the video. But before we get into that, let's just take a look at the press release and the numbers. So I want to read you this very first paragraph here of the Toronto Real Estate Board's June release, and because I think it's interesting. It says, residential transactions reported through TREB's MLS system remained high in May of 2021, but fell short of 2016 record and were below this year's March peak. Despite a slight ebb in sales over the last 2 months, market conditions remained tight enough to push the average selling price to an all-time record in May. Now, here's the question. What does that all mean? It's definitely an interesting conversation piece here, because what we're seeing is the sales come off of record highs from May of 2016, where we expected there to be a record number of sales in this market. There wasn't, and the question is, why is that happening? And I think there's two arguments that could be made here. One is that argument that we've been talking about with respect to exhausting the number of buyers. And two is the piece about Toronto and Ontario basically being on lockdown and there being less activity as a result of that. And if I'm going to venture a guess, and again, this is a guess, nothing more, I'm going to say it's more to do with the number of buyers being exhausted than it is to do with lockdowns. Because if people really wanted to get out and buy those houses, they would find a way, because what we'll see in the coming charts here is that people were finding ways to list their properties and there were sales happening. So what that tells us is that the lockdown can't be completely to blame for these numbers. Now, it'll be interesting to see what happens in June, July, and August, and it'll be interesting to see where the numbers go from there. But, in a month where the stress test was introduced June 1st, we would have expected that last week of May to be totally crazy, and it just doesn't appear to be the case. So what's going on? What's happening in the market here? And I want to jump in and take a look at some of the TREB housing charts here. I'm going to make myself a little bit smaller so you can see a little bit easier. And look at a few of these charts, and I find them really interesting. I'm going to kind of go through them and look at them as you're seeing them as well. So I haven't done in-depth analysis of this yet. So you're going to kind of get it as I do it. But we're going to look at several of these charts. And the first one here that I want to look at is the TREB MLS sales monthly with the 3 previous years for comparison. So in this chart, you've got the orange line that is 2021. And you can see that compared to every year for the last 3 years before it, 2021 has been an exceptional year with respect to sales. It's setting a lot of records. And you can see this March peak where housing sales got really crazy there. And then what you've seen in April and May is it trend downward. Now, again, is this lockdown, or is this just running out of buyers? And I think the June numbers will be really interesting to see, because that's going to tell a really interesting story. But basically what we're seeing is housing prices continue to go up because there's still that frothiness. There's still that belief that Toronto housing prices are going to go up. So people are still bidding over the asking price. They're still getting into bidding wars, even though the number of sales isn't as high, and even though there are more listings coming onto the market. So it's a really interesting scenario here, but what you can see is definitely 2021 has been exceptional, but it seems to be trending down. If you go and you look at the previous 3 years, in every single one of the previous 3 years, we see March sales be quite high, then we see them come back down. Actually, sorry, let's not use 2020, which is the blue line, because that was obviously last year when things really got weird in April and May. But if you look at 2018, 2019, what you see is that the numbers tend to trend up with respect to number of sales right through May and then start to come back down a little bit in June. Well, this year we're seeing that tapering off happen earlier. And I believe, and again, it's a guess, I believe that this is because we're seeing a tapering out of the number of available buyers. People are just ready to give up. They're seeing that normalization is going to happen in the next few months, and the urge to move to bigger spaces and have to participate in the market is just going down. So that's what I think is happening here. Now, if we go and we take a look at new listings, we're seeing similar sorts of trends. So in the past, May has always been the highest number of new listings, and what we're seeing is that happen in March of this year. So again, new listings are coming down off of their highs. Interesting data to look at. And then sales to new listing ratio. Now this is a really important number, because sales to new listings is basically the number of sales compared to the number of new listings, right? It's sales to new listings. You don't need me to tell you that, but in case you didn't know, that's what it means. So if we look at this, what we see is this number tends to be more consistent over a spring market. And what we're seeing is that it very much is holding true to form. So we're seeing what would be a normal sales to new listings pattern. So the number of new listers is pretty much equal to the number of new buyers. So what I'm seeing in this, and what I extrapolate from this data, is that people are just starting to get burnt out on the whole real estate story and on the whole real estate trend and the craziness. And what that typically tells us is that we're going to see a flattening or even a slight dip in the market before things get back to normal. So this could be a really good sign, and it could be an especially good sign given that we have the new stress test in place, and that was essentially a 0.5% increase in interest rates as far as borrowing power is concerned, which therefore means that we should see at least some cooling out if the past is any indication of the present and the future. Now, obviously, you can't always use the past to predict the future, but in the past, when stress tests were implemented, it cooled out markets. So we can kind of hope and expect that that's what's happening now. Now, if we go and we just continue on here looking at average resale home price, this is the one that's really interesting, because this is the first time in history that Toronto's real estate market has exceeded $1.1 million. Now, we thought it was going to do it in April. April numbers came back off of the March numbers. March was like $10,000 away from being a $1.1 million average price month. And then May, the prices came back and obviously pushed up into that 1.1 million mark, which is a big breaking point. Like that is a number that previously has not been touched, and therefore it'll be interesting to see how the market reacts to that, because sometimes what we see is when stocks, for example, hit certain price points that seem like they are completely out of reach, that's when things start to correct and they come back down, because it's like, oh, Tesla hit $750. That seems really high. So people stop being so adamant about investing in Tesla because it seems like it's at a really high price. Maybe that's what's going to happen in the Toronto real estate market here. Maybe people are going to look at this and go, wow, that seems like a big number. Maybe it's time I back off. And then with respect to these trend lines, and I think these are really interesting pieces of data because they go back into 2016. If you look at the sales trend line, you can see back in 2016, the sales trend line got really high. You can see a record number of sales there. You can see that in March, this number got really, really high, and then we're back kind of below what the records were in 2016. Interesting data there. You can kind of see that new listings, we aren't really at the same stage that we were at in 2017 when we had a lot of new listings coming onto the market. And then average house price, you can see that we were having some big months of growth. Look what happened here in 2016, 2017. Prices got really, really high, and then they backed off a little bit. That was the stress test taking full effect right there. So what I would expect is if this graph is any sort of indication, we're going to see the housing prices kind of back off maybe to about there, and then kind of continue flat for 3 or 4 years. That's kind of the guess, if history is any sort of indication of the future. Now, one thing that you have to keep in mind here is that People are awful at predicting what is going to happen in markets. In fact, if you just predicted that housing markets were going to increase by 2 to 3% a year, which is what they normally do, and you did that for 15 to 20 years, you would be a more accurate forecaster of what's happening in the real estate market than the absolute best economists in the country. So think about that. If you just forecast the average, you're probably going to get it right more often than the best forecasters. So the reason why I mentioned that is because when you look at people who are predicting that the market's going to fall, or you look at people who are predicting that the market's going to continue to go up, really the chances of them being right is slim to none. And if you're in that boat and you're in that group of people that is predicting that something is going to happen in the economy that is either a crash or a boom beyond what we already are in, well, there's a pretty good, highly likely chance that you're going to be wrong, because what happens in economies is they typically move in a general pattern until such time as there's a surprise, like a financial crisis or a pandemic or a war or something like that. So be very cautious about making your buying decisions on whether or not you think the market's going to go up, whether you think it's going to go down, or what your basic predictions are. We had a client today who decided they wanted a 4-year fixed instead of a 5-year fixed because they seem to think that they have some sort of line on the market and thinking that they know that interest rates are going to go up in 4 years instead of in 5 years. And I'm going to tell you right now that there is about a 99% chance that they are going to be wrong. But if you're in that boat where you're trying to make decisions based on short-term thinking, you're probably going to predict things wrong most of the time. So here's the point, is if you're in the Toronto real estate market and you're trying to decide what to do, what you need to do is you need to start thinking with, instead of 1 or 2 year thinking, 10 to 15 to 20 year thinking. And you need to think about what the next 10, 15, 20 years looks like, and whether or not, if you got into the market right now, you could sustain and hold on to that property for the next 4 or 5 years and then into the next 15 to 20 years, whether that means staying in this property or moving up. But you got to start looking at your long-term plans rather than trying to predict the future, because there's a lot of people that tried to predict the future in the last couple of years, thinking that housing prices were going to go down. You know, they came off of this 2016 number right here, and they said, well, there's nowhere for them to go down but here, and they expected a further drop. And now they've basically priced themselves out of the market because they had a perception of what they thought was going to happen. And again, that reality is that even the best economists in the country can't predict what's going to happen with the real estate market. So therefore, neither should you try to do so either. What you should be doing is thinking long-term and try to build out a 10, 15, 20-year plan and go from there. Now, if you're looking at getting into the real estate market, if you're trying to figure out how to save a down payment, if you're trying to figure out how to go about selecting a realtor, finding a property, how to navigate this whole craziness with respect to multiple offers and so on and so forth, well, we've got a home buyers boot camp that has been running for the last 4 weeks. It's continuing to run. It's actually going to go on a little longer because we're putting even more information than we originally expected into it. We have priced that course so low that anybody who purchases it will be able to get at least 10 to 50 times their money back just by purchasing the course. And in addition to that, we've put in some special offers from Mortgage 360 that guarantee that you'll get at least 10 times your money back. I'll put a link in the description below if you'd like to join us on that journey. And if not, best of luck to you, and we'll see you on the next video, hopefully. And if you found this video useful, again, tell me if you liked the local focus. Hit me up in the comments below. And don't forget to hit that subscribe button, the notification bell, and the like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers. I sincerely hope you're the winner. We'll see you on the next video. Cheers.